Hello traders, it's Roberto, and this tutorial I'm going to go over a few um, trading strategies, specifically the divergence setups. And the chart that we're looking at right now is the pound New Zealand. Completely missed the entry on this trade, but there's still time to get in. And this is the pound New Zealand, a daily chart divergence setup. And I'm going to show you what a classic divergence setup looks like and where the entries are. And we'll look at several setups. We're just going to look at the most recent. And here is swing points that are basically not going any lower. They're not copying divergence on MACD. So when price goes up, MACD goes up. When price goes down, MACD goes down. So MACD is a copycat of price, but sometimes what happens is that MACD doesn't go in the same direction as price action. And here we have wave patterns that are going lower, right there, that match up with the swing points of price action that are actually going up. So that is divergence. So where do we get in when we see divergence on a daily chart? Because sometimes it can take several days or weeks before there's even an entry. And the entry was actually here. So what we would have done is draw a fib from the swing high to the swing low. And price just bounced off that 61% retracement level. This is very classic divergence setup on any time frame, but when you see these on a daily chart, it can last for weeks, if not months, and I'll show you a few trade setups that happened in the past. So there was the trade entry was at 96.74, and look at the reaction now. There's still time to get in this trade, and we're going to be trading off the smaller time frame. But the next, let me see, the target would be, what I would do is draw a fib from this swing low to the swing high. And these are the targets right here, 184.15 and down here 173.88. Okay. I'm going to show you a couple of more divergence setups on a daily chart which can last for a long time. So again, divergence on the daily chart, price needed to break a swing point, and it did, and then retraced up to 68%, and then from there turned around and went south. And now we're in a downtrend, and this would have been the ideal entry right up here. And you just, if you manage to get in this trade around this level, then all you would need to do is move your stop loss as the market continues to go down. Okay. Let's look at a couple more. Here is a nice trade setup. Divergence. Okay. Now price didn't come back down much. I think it might have maybe come down. Actually, it did. It came down to about 50% retracement level, and then turned around and went north. Now, where would we exit this trade? Then what I would have done is draw a fib from that point, that swing high to the swing low, and look where price just stalled out, right at that 423 extension. It broke the 161. Look at right here, you can see the 161 extension. It initially bounced off that level, and for 2 or 3 days it just consolidated and broke right through and went to the next area. Let me see if I can get rid of some of these fibs so you can see it better. Well, I can't, for some reason I can't remove this. Okay, let me see if I can do it. Let me just remove all the fibs, and then you can see the entry and the target. So the entry was down here. We have swing low and swing high. Price came back down to 50% retracement level. So from the swing low to the swing high, we enter down here, but we draw a fib from the swing high to the swing low to see what our target would be. So here's the swing high, swing low, and 423 extension, price just almost to the pip, a little bit just bounced off of these levels and then just retreated. Initially it stopped at 161 extension, and then it consolidated for a few days and just broke through and then went to the next extension, which was 261. I don't know if you can see it really clear. Let me just make it wider. Here's a 261 extension. Notice that price respected that level for about 2 days, broke through it, and then finally finished off that 423 extension. Okay, so the trade setup that we see now is this. We had divergence, price came up to 61% retracement level, right? So now what we do is, here's the swing low, here's the swing high, and we do the same thing, only in the opposite direction. So here's the swing low, here's the swing high. The 161 extension is at 184.21. That's the first target. And the second target is 261. And then the third target is down at 158. It could take months to get down to that level, but this is pretty much the trade setup, and we should continue to be selling the pound New Zealand for the next few weeks or months ahead based on this divergence setup. Here is another divergence setup on the same pair. Let's qualify it. We've got swing points are going higher, but notice that MACD is not going any higher. Okay, remember that MACD is a copycat of price. Price goes up, MACD goes up, price goes down, MACD goes down. But here we've got price going up. It went down, then it went up, but MACD didn't follow. We didn't have higher wave points. We had a lower wave point, hence divergence. So price came back down, it broke its swing point, and then went back up. And then we would draw a fib from the swing high to the swing low. Here again, 61% retracement level. This would have been the entry. Okay. Then, where would we have a target? Well, here was the swing high, here was the swing low. Here was the 1, 2, 3 pattern. So we need to draw a fib from this swing low to the swing high to see what our target would be. And it went all the way down to 161 extension. Not quite. That was the first target right here, 161. And it was around this level of support. But it continued to go down, but it didn't go all the way down to 261. Still a good trade and put in. And notice this trade lasted for about from December 18th all the way to February 13th. Alright, so that trade put in about 1900 pips. So divergence setups on a daily chart, extremely powerful. And you can, if you did not get in at the ideal place, then there's always room to get in this trade because it should continue for at least a month. And that's what we're seeing right now on this trade setup. Most recent trade setup right here. Divergence, price, hit that 61% retracement level. We draw a fib from the swing low to the swing high to determine where price is going to probably stall out. 161 is the first target, 261 is the second target. So these are the levels of support. Once this trend line is broken, this is where the market should go. Okay. So thanks for watching the video. Remember, we have Trade Room open at Sunday night at 9 o'clock Eastern, and we'll be looking forward to trading the pound New Zealand. Also the pound Australian dollar, which probably should follow the pound New Zealand. So have a good weekend. See you guys next week.